Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive doji cross yesterday, verging on being an indecisive spinning top. It was the second consecutive close over the combination of the flatlining long moving average, currently 108.28, which is highlighted in gold on my daily chart, and the mauve coloured slowly rising medium moving average, currently 108.21. However, what was perceived to be a strong move higher earlier this week has fizzled out under this indecisive pattern and under the topside resistance of the capping 50% Fibonacci line for 2023 at 108.64. However, it was nevertheless still yet another consecutive close up over the small mid-January to late February bearish expanding wedge pattern, currently 105.54 to 107.90. For the moment, I have still kept highlighted in green the October 2023 to late January 2024 broken bull channel, as I'm still wondering if the market will trawl along on the underside of the lower bull channel line, which is currently at 109.34. Beyond the 50% Fibonacci line on the upside, we have the short medium moving average, currently 108.82. That's highlighted in green on my daily chart. Whilst further down, we have the May 2020 low at 107.66 and the April 2020 low at 107.25, the latter being the more interesting. And so far today, a strong move lower from the open, below both the long and medium moving averages, and now looking down to test the broken upper trend line below, currently at 107.90 of the bearish expanding wedge pattern. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday after the previous 5 bullish white soldiers. This is the first hesitation we've seen in the market since prices punched back up over the broken lower time, currently at 126.56, on November to December 2023 shallowly bullish shift pitchfork, highlighted in dark blue on my daily chart. It was also the third consecutive close back up over the flatlining short medium moving average, currently at 126.74, and a September 2020 low at 126.72 since late January, though an indecisive doji cross is not necessarily helpful in that. The topside was again capped by the familiar next resistance, the 50% Fibonacci line of the June 2016 to September 2022 move at 126.99. We also have general congestion formed between December 2023 to January 2024 from where we are now up to the middle time, currently at 127.87. Looking below the lower time, we seemingly have little until the 50% Fibonacci line, the July to October 2023 move at 125.90, though that also has reinforcements rising up to help support it in the form of the long moving average, currently 125.74, and the medium moving average, currently 125.46. Well, so far today, a strong move lower, below the short medium moving average, the September 2023 low, and the lower time. We're now eyeing that 50% Fibonacci line at 125.90. Euro sterling. A reactionary bullish white soldier yesterday, not quite making it as a bullish above the stomach pattern, but close. Prices continue to be attracted to the December 2022 low at 85.45, though this time it was with a close up over the dark blue highlighted middle time, currently at 85.37, of the November to December 2023 bearish shift pitchfork. However, we're also still within the breached but not broken small purple highlighted gently rising late January 2024 to date expanding wedge pattern, and that's currently 85.20 to 85.93, which obviously also tempers any bearishness a little. Further down we have the bright red neckline, currently at 84.96 of the May to August 2022 Head and Shoulders continuation pattern. Now this is noteworthy as it had successfully held up prices mid-February. Whilst overhead, well, we have three descending moving averages, the nearest being the short-medium moving average, currently 85.45. So far today, well, a dip towards the December 2020 low, but initially a rejection for now, and instead an attempt to explore the top side, though I think that's also been tempered for the moment. It really does like that December low at 85.45. US dollar against the Japanese yen. A reactionary hanging man pattern yesterday, and you could also see it, I suppose, as a bearish harami, if only just. Interestingly, we ended up closing right on the same level as last Friday, so it's still quite a high close. Overall, we are still settled within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork highlighted in purple on my daily chart. We're in between the lower time below, currently at 143.44, and the middle time above, currently 157.52. We are additionally very close to the middle time above, currently at 151.32, of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. The move down yesterday brought up the question of whether we might have a weekly key reversal this week. However, so far, this idea has been tempered. So far today, a counter-reactionary move back up what looks right now like a bullish engulfing pattern. However, it still wouldn't need that much downward pressure now to still make it a weekly key reversal. So caution, just keep a wary eye on the downside. US dollar against the CNH, the offshore Chinese yuan. A fourth bullish white soldier yesterday, pushing up through and closing over the slowly declining medium moving average, currently 720.93. Further above, we have the slowly rising long moving average, currently 722.20, which looks to be the next overhead resistance. Okay, so as I said this past Monday and have repeated ever since, in that we have an unusual situation in the Chinese yuan. Not because of the lack of movement, but because we have a weekly key reversal up last week in the US dollar CNY, the spot onshore Chinese yuan, and at the same time a weekly key reversal down last week in the US dollar CNY, the onshore Chinese yuan, again, but in the 1 year NDF. Seemingly we're undergoing some changes in the curve here. So far today, well, a follow-on higher up towards the overhead long moving average. Beyond that, we have the highs of February and January in the 723.20 to 723.35 area. US dollar against the Mexican peso. A bearish black crow yesterday after the previous two sessions were indecisive doji crosses. Prices closed back down below the March 2016 low at 1709.23, as well as the short medium moving average, currently 1706.17. However, the market halted its decline at the next support below, and that's the April 2016 low at 1703.89. However, this does not seem to be the best support, as further down we have the dark blue highlighted middle time, currently at 1693.70 of the December 2023 to January 2024 mildly bearish shift pitchfork. This bearish pitchfork also accounts for the best overhead resistance, with the upper tie above currently at 1727.53, and with the adjacent declining long moving average currently at 1724.72, and the medium moving average currently 1729.62, providing additional reinforcements. I've said this next bit before and I'll say it again. One could argue the market is utilizing the middle and upper tines of the bearish shift pitchfork as a de facto bear channel, and I would go along with that argument. So far today, a reactionary move back up off the April 2016 support at 1703.89 and up to testing the March 2016 low now at 1709.23.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.